good morning, Jarrod. How are you, buddy?
Brandon, I'm fantastic. Thank you for asking. How's your day?
Hey, we woke up on the right side of the dirt and we're off to the races, buddy.
I heard, you know what? I heard a song this morning. I woke up on the wrong side of the truck bed this morning.
Oh, there you
Nobody?
go. Well,
Anyone?
cheers. Cheers to you.
Salute. Oh, look at you. Look at you pimping out the Steadfast Design Builders Cup. I like that.
Oh, absolutely. It's the only way to
Cool.
start
So
your
what are we
morning.
here to talk about today, Brandon?
Hey, it's the end of June, so I think we wanted to get on here and do a little, market temperature update, on both sides of the aisle,
Yeah.
right? The construction side and the mortgage loan side. What I'll get right into it.
Well, that's the
So,
name of our show. Or what is the name of our show? It's Blueprints and
and
Bankrolls.
bankrolls.
Plug.
Uh,
Sponsored by Steadfast Design Builders.
yeah, so what I'm seeing right now is that the market is trending up for 2026 next year. We're getting a lot more phone calls. We're getting a lot more design build contracts in our office
Okay.
right now. And a lot of people are trying to get in smaller projects before the end of the year, kitchen remodels, bathroom remodels. We wanted to we wanted to make sure that we let people know, hey, if you're thinking about this, if you're thinking about building your dream home or remodeling your home, and doing those fixes, now's the time. So you can find your design team, find your general contractor, get budgets together, and then find your loan team. What are you seeing on your end?
Yeah, I mean, activity is definitely up. Leads are up. There's a lot of opportunity out there. A lot of people are using the equity that they built up. I mean, equity nationally is at an all-time high. I mean, it's a lot of people that bought houses and the value has increased over the last, 3, 4, 5, 6 years. They have so much equity that they're sitting on that they want to be able to tap into. So, one of the things that I do is help my clients and my borrowers tap into that equity. So pulling out an equity line, possibly doing 203K loans for an investment purchase. A lot of clients want to get information on, what can I do? What are my options? I have all this equity, but I'm sitting at, 2.5, 3.5, 4% rate. I don't want to touch it. Well, I agree. We don't want you to touch it. We need to look for options where people can tap into the equity without dipping into their savings or retirement or investments, so they can use those things to, update the home, get the house the way they want it. If they need to upgrade, a bathroom, a kitchen, an addition. One thing that we're going to also talk about here in our series is going to be like, adding an accessory dwelling unit or ADU, adding a second story. I know, Brandon, you do a lot of work with people that want to add a complete second story, or they want to add, a bigger, living room or family room as their family grows, because again, they're at a really good interest rate. They don't want to touch it, because interest rates have gone up. Rates are historically at a 25 to 30-year high. It is what it is. Okay, we can't control that, but what we can control is the ability to take out the money in the home using your home's equity to get the house the way that you want it with minimal risk and minimal financial implications. So, with that being said, like I said, activity's up. It does take time to build and plan and get permits and get your design team, like Brandon said. Going through the process for getting a loan is fairly simple. I've been doing loans for over 20 plus years. The process is pretty simple. We're going to review your cash. We're going to review your credit. We're going to review income. We're going to figure out how much equity you have. That entails, having an appraiser come out to the property, assess it. If you're buying an investment property and you're looking at putting, some money down on an investment, there's also different ways of navigating that purchase, even if you have a challenging situation. For instance, yesterday, one of the CPAs that I do a lot of business with, his own personal loan. I said, hey, he wants to get pre-approved to buy a large home. It's, over $1 million property. Well, I got his tax returns, doesn't qualify. He's a CPA. I promise you, he makes a lot more than his tax return says. But what we did was I kind of determined and said, hey, let me have your last 12 months of your business bank statements. And then once we looked at his bank statements and we could see the cash flow, we were able to qualify him for up to $2 million. So as long as he has 20% down, has great credit, there's many, many alternative ways of getting financing for those people that are self-employed or, have multiple investments or have, not to get too deep in the weeds, but there's different cross segregation analysis ways of pulling income out of tax returns that is extremely hard. And you have to know what you're doing as far as a lender to find those opportunities. So that's one of the things that I pride myself on is finding and fixing those puzzles. So
So
what else?
so
What else do we want to
real
touch
quick
on?
on that, Jarrod. Like, so
Yep.
we're trying to update people on timelines, right? Like, hey, if you're
Hmm.
gonna build something, substantial in 2026, first quarter, now's the time to discuss it, right? So
Yep.
once they find their builder and everything, and they have a budget in mind, what is the timeline to get finance and get those funds? On a typical situation, right? Some outliers
Yeah.
don't line up, but what is that? 30, 60, 90 days? What is the
It's
time for
30
cash?
days. It's about 30 days. We'll go as fast or as slow as the client provides the documentation. The main thing is some people are, slow to get me all of the documents. The way I do it is we do a complete financial review. We look at cash credit income. And then I'm going to look at needing, pay stubs, your tax returns, a most recent bank statement, mortgage statement. We're going to look at everything. But the cool thing is that I have built a team to cater to my clients. So we are literally on standby once somebody says, "Hey, I have a need. Here's my goal. What are my options?" So once we know those variables, then we can hit the ground running, and really work on getting a plan together and getting the financing. But I've had people call me in the 15th of the month and they said, "Oh my God, I need to pull out cash." Well, we can do that. I mean, we can absolutely do that in a matter of weeks. So, but in general, it's just a lot less stress, a lot less hassle to, to meet with your financial team first, to get the information. And we may need to kind of position it to where we pull out the loan, down the road. But once you're pre-approved, meaning I've reviewed your cash, your credit, your income, you're just going to be in a much better situation to know, hey, oh my gosh, here's my dream. Can I afford it? Well, let me help you, decide and see if it makes sense. Another example is this week I had another client come in. They said, "Hey, I want to do X, Y, and Z." And at the end of the day, after reviewing, I said, "You know what? I don't think it's a great idea. Here's why." And then here's another option for you that they hadn't even thought about. And I said, "Well, we can do however you want, but in my opinion and in my experience, we need to make sure that we're also looking down the road. Hey, how long do you want to live here?" I had a client that says, "I want to pull out money on a 401(k) and buy a bunch of investment properties." It didn't make sense at the end of the day for them specifically. And I showed them the reasons why. But sometimes people just need the information, and not make knee-jerk reactions, or
All right.
decisions.
So 30 days after they give you the documents.
Worst case scenario. The only reason it would ever take more is an appraisal came in lower than expected. Something came up with a credit or an income situation. But 99 out of 100 loans at the end of the day, once I have all of the documents and we get it submitted, 100% of the time, 30 days or less is
Okay.
pretty typical.
And then just to give everybody a heads up on timelines for us, you know, between the time we meet you, time you get an estimate, and if it's a small job like a kitchen, bathroom remodel, submit to the local municipalities. We're probably from the first meeting to the permits in hand, 45 to 90 days for a small. A larger project, it could be 6 months to
What's a
a year.
larger project? Define a larger project
You
for
know,
the one
home from the
for
ground
all the
up,
homeowners.
5,000 square foot home on a blank piece of land. There's a lot of work that goes into that, so that's about 6 months to a year before we get permits in hand, and then a large remodel with an existing house. We're probably with an addition. We're probably 3 to 6 months total, including plans and permits. So,
What
yeah.
would be the difference between that happening in 3 months versus six? Are you saying like setbacks or issues or
Yeah,
uncovering
it
issues
just if we have
once
to,
you start?
depending on if the land is sloped, we need soil reports, topographical surveys, or we have to do a new septic design, if you're not, if you're on septic. So those are all items that take a little more time and the city that you're in. So depending on the city or county that you're in, some are faster and some are slower.
Who's the slowest? What cities and county or what city and county is the slowest right now? Honestly, like who is it?
Oh, I want to keep my business going, but San
No,
Jose
but
area is pretty is
okay.
pretty tight,
So
right?
So we need to account for that. Like you said,
Yeah.
if you want to start in first quarter, better make the
Yeah.
pick up the phone and start getting the process rolling. Because yeah, I mean Santa Clara County can be slow just because there's a few million people in the county. So we
Yeah.
want to make sure and take that into account. Cool. What are you seeing, Brandon, as far as challenges? Like, what are you seeing the most? Uh, what are you seeing the most issues or challenges with once people come to you and say, "Hey, here's my ideas and my plans." Are you seeing people having challenges with the financing piece, or are they struggling with, "Oh my gosh, the cost is higher than I thought, but it's my dream, it's my goal, I want to get there." What do you tell me about that?
Yeah, so typically the cost, and the education part of it, right? Like what goes into building a house. Some people only see the final product. They don't see inside the walls or underground or in the attic and,
Right.
and all those details. So we try to explain all the details. The cost is definitely one of the items, and unfortunately, we live in the nicest state, California, with the weather-wise, but labor costs are high, very high labor costs. Average construction worker right now is 45 years old,
Hmm.
you know. So that drives up cost with the knowledge they have. In addition to in our area, year over year, construction's going up 4.5 to 7.5% every year.
Wow.
So people that are like, "Hey, I'm going to put it off for 2 years," well, that could have just went up 10%. You know, on a
Yeah.
$1 million house, 10% is a lot of money.
Yeah.
I think that's our biggest issue is money, and people want large homes. They're like, hey, I want this 5,000 square foot home. It's not that your house is expensive, it's that you have a lot of square footage to cover.
Right.
5,000 square feet with $20, hardwood flooring installed. You know,
Yeah.
that's what is that? That's a lot of money,
Yeah.
right? 100 grand.
Yeah. Tell me about what you're seeing as far as generational um, multi-generational families, meaning mom and or grandma and grandpa are moving back in because of XYZ, health, money, so on and so forth. Are you
Mhm.
seeing a lot of that in your market right now as far as multi-generational I guess would say that where they're coming together to live in the home?
Yeah, so baby boomers are getting older. They're retiring. Uh, a lot of them are planning on making an ADU in addition to dwelling unit.
What is
Uh,
ADU? Brandon, please let the let the
additional
let the friends and family know what's going on here.
additional dwelling unit. If you think of an ADU as what we used to call casita, right? It's another quarters, another
Granny
home.
quarters, granny
Yeah,
unit.
granny quarters. Yeah, so they want to be closer to their families, their grandkids. So they're retired. They're cashing out of where they're at, retiring, and they want to build, on the property of their kids. Or maybe the kids are struggling because the economy is a little dipped right now, and the kids are coming back to the home with the parents of the large
Hmm.
property. They want to build a different unit. In California, in our area, we can build up to a 1,200 square foot ADU. I mean,
Yeah.
that's big, and then, your ROI, your return on investment on that is that you can rent that out.
Hmm.
Let's say your kids only need to live with you for 2 or 3 years. Okay, well then you can rent it out, and then
Well,
you can,
hopefully only 2 or 3 years. Let's be
yeah.
honest.
Let's
Okay.
see.
All
I
right.
don't know.
Yeah. Hey, when I hear the word ADU or accessory dwelling unit, I say live-in babysitter, right?
Yeah, absolutely.
Grandma and
Hey, drop them
grandpa,
off.
I gotta go. I need you to watch those kids because they're driving me nuts. So
That's
I hear
it.
you. So, okay. Well, cool. Well, definitely want to remind everyone to use a general contractor, a licensed general contractor that doesn't have the nastiest track record of starting your project and then bouncing. You definitely want to make sure that you meet with a mortgage professional that is licensed, that knows what they're doing, that is a broker like me, that has access to 100 different banks and not just one or two or three. There's a definitely difference between a retail loan officer and a mortgage broker. Okay. The difference is the mortgage broker is going to be able to find you more sources cheaper at a better rate at lower cost. Bottom line, every time. A retail loan officer has a lot more, what is the word? They have limited options. And then, I would rather go to somebody where I can get, 100 options versus four. The difference is you're going to get, better rates, better service, and just more flexibility. Like I said, we talked earlier about the business owner makes a great income just on a tax return, can't show it, can't qualify. There's no way this guy's buying the house that he wants for his family of five. We were able to get him qualified. He's going to go out shopping this weekend. He sent me his documents on Friday of last week. We're filming, it's on a Thursday. So in 4 business days, we were able to take a no and turn that into a yes. Completely blew him away because he just
So
didn't know that option was
I got a
available.
mortgage pro tip, right? That I've learned
Go
from you
for
in
it.
the past. As soon as you're
Go.
approved, until you close on that house, don't finance anything.
Correct. Great point. Once you do get pre-approved and yes, exactly. So a lot of clients, they get excited. They're like, oh, it's summer and I'm out and I want to go buy a timeshare. I'm going to go buy a car. Anytime you finance additional things after you get pre-approved for your loan, yes, do not buy anything. And I will talk to you about that in our conversation or our loan consultation is we're going to say, don't buy anything, don't move money, don't co-sign for anyone. Your kid wants to buy a car, congratulations, they can do that on their own or figure out another option. Once you've been pre-approved, if anything changes from the time you've been pre-approved until you have a key in your hand or the loan is closed, it could jeopardize the loan. I make sure that we account for things. I remind my clients, hey, don't buy anything. Like I scare them. I literally say, please, if you're anywhere buying anything, moving money, or getting deposits from other weird sources, just tell your loan officer. Just say, hey, is this okay? Because a lot of people, they just don't, they're just not up to speed or they're not, um, educated on the process and how it works. But again, we figure it out. We don't have any issues. We'll make it work at the end of the day. It just causes added stress and delays. So, but great point, Brandon. Look at Brandon with the little pro tip.
Hey, over
Okay,
here learning
I
from
see
you.
you. I'm watching you.
Hey,
Okay.
well, I think
Hey,
I think that's all we have right now because we don't want to talk everybody's ear off. And what do you think, Jared? Anything else?
no. Like I said, talk to a licensed general contractor. Make sure you find a great loan officer that is in your local market that knows what they're doing, that can, also have the ability that you can go into their office and meet with them. There's a lot of online lenders, these, Redfins and these, Rockets and all of these super fun things. That's all great. I promise you that a local mortgage broker is going to absolutely destroy those rates online. They're local, they know the market, they have, relationships with realtors and appraisers that know the market, that know what's going on. Once you get into a transaction where you're dealing with, potentially 25, 50, 100, $500,000, you need to make sure you've got a team behind you that's ready to support you. If curveballs get thrown, they need to be able to hit that thing out of the park. Bottom line, period. So that's my advice.
Yeah, my advice is look at Google reviews. For your general
Google
contractor,
reviews.
the past three clients, give them a call, and do not go with the cheapest contractor.
Yeah. Well, you get what you pay for, right? That's what I heard.
That's right. Hey, have a great day. We'll talk to everybody soon. Thank
Okay.
you.
This is Jarrod and Brandon signing out on our podcast show called
Blueprints and
Bank Rolls. Let's
let's
go.
go.